a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hey everyone, Eric Dutram here for Zacks.com, coming to you with the latest episode of Exploring ETFs. Today we're going to be looking at the financial market. Now this space has been really volatile over the last year, but we've started to see some green shoots in this market in the last month or so. This is really thanks to some better numbers out on the jobs front, health in the European market thanks to declining worries over Brexit, and then just a better trading environment in general for a lot of these companies. This has allowed XLF, the financial ETF, to outperform the S&P 500 so far in the last month or so. But there's actually one area of the market investors need to look at more closely, and that's the regional bank space. There's actually a couple ETFs in this market, and some investors out there might not know which is the best for whatever they're looking for in this corner of the financial world. Well, we're going to take a look at those three ETFs in a little bit closer detail today. Hopefully you'll learn a little bit more about this corner of the market. First up, we got the iShares product. U.S. Regional Bank ETF, IAT is the symbol here. And if we look at some of the top holdings, we can see what it is biased towards in terms of its cap focus. As we can see, U.S. Bancorp, PNC Financial, and BB&T make up the top three holdings. But the key part to note here is that the three combine to make up about 33% of the total assets. Now, the fund does hold about 56 companies in total, so you're getting a huge percentage of your exposure in just those three names. So you're going to get a definite large cap focus here, so it's definitely something to consider if you're looking at the regional bank space and you want some more stable companies in this corner of the market. Another important thing to note about this ETF, if we look back at the chart right here, we can see that regional banks make up about 78% of the total, and then we also receive about 20% in these other two sectors of diversified banks and then thrifts. Now, this means that the ETF has a lot of other exposure, so you're not really going to get an absolute pure play, but you're still going to get a great overall holding in this corner of the market. Definitely something to keep in mind in terms of the actual asset exposure for this ETF. Now, there's a couple other ETFs to look at in this market. We're going to look at KRE is the next choice right here, and this is a product from Spider. The key thing to note about this fund is its more equal weight focus. As we can see, this ETF doesn't have the same focus on a few companies. We can see that the top holding makes up just 3.8% of the total. So you're going to get a much more spread out focus for this ETF. And another key thing to note about this product is it's actually cheaper than the IAT fund we just talked about. So you're going to save a little bit in terms of basis points. Now, the main thing to note here is that thanks to the spread out exposure, you're going to get a lot more small and mid-sized companies, so the volatility is going to be a little bit greater in this product. We're going to see an average market cap of about half of what we saw in IAT. So definitely something to keep in mind for investors, and it's going to ratchet up your risk, but it's also going to help you outperform when the markets are really in a bullish trend for financials. Now, there also is one other ETF to note in this market, and that's KBWR. That's a product from PowerShares. Also costs the same as the KRE product we just talked about, 35 basis points. But the key thing to note here is although it has the same equal weight focus, and we don't see more than 4% in any one name, it does have more of a small cap focus. We can see the vast majority of assets here are in this small cap value or small cap blend space. So this is going to make the product even more volatile than what we saw in KRE or even IAT. You're going to get the most bang for your buck here in the bullish markets, but it might also underperform in the bearish markets too. So, there's definitely some key differences between these products that you might not notice if you just look at the names. The most important thing to keep in mind here is IAT is going to have the largest cap products, KRE is the middle, and then KBWR is going to have the smallest cap funds. You're all going to get regional bank exposure in any of them, but you're just going to get a different focus on the size of the companies, depending on which ETF you choose from. Well, that's really all the time we have for today. Hope you learned a little bit more about regional banking ETFs, and tune in next week for some more information on the wide world of funds. For Zacks.com, I'm Eric Dutram.